Welcome, Pavan, to this episode of podcast on Dawdle, and would like to start it with introducing you. I keep the floor open to you. Why not you introduce yourself to our audience and help us take through your journey so far. I know it has been a long one, not so long one, but still, you have done quite a bit of things across industries and companies like Credit Suisse, Morgan, and all these companies. Over to you, Pavan.
Good morning, Rishikesh. Thanks, first of all, for inviting me and for providing this opportunity to share about my life journey and experience with the larger audience. So, for everyone's benefit, to myself, Pavan Goyal, I'm a finance and risk analytics professional with around 18 years of work experience, having worked into some of the Fortune 500 banks. So I did my MBA from IIM Lucknow, and then I started my journey in a less known company called JP Capital that was in a proprietary trading. So I was working on commodities market and currencies market, trading into those segments. Later on, I moved to ICICI Bank. There I was part of their global markets group, working on derivatives transactions along with primarily targeting the corporate businesses. So, and then almost after 4 years, I moved to Credit Suisse, and that time there was a small shift in the career at that time, and I moved to risk management aspect of the banking, and there I was worked with almost across the global desk, across all the kind of asset classes, working on multiple products and complex financial transactions. And that time I got intrigued to some of this data analytics related stuff. So I was exposed to some of that and started getting the interest. So slowly, my profile moved not purely from risk management to the risk analytics side, which included building of the models for risk calculation. And in the large MNC banks, these models are like very complex because they are really looking into complex financial transactions as well as looking into the large portfolio of the clients spanning across global geographies or kind of different industries, businesses, as well as different kind of underlying asset classes. So I worked there for in Credit Suisse almost for 4 years, and then I got an opportunity to join JP Morgan. So they wanted to start a similar team in India. So I set up that team from the scratch and build that team to do the similar kind of deliverables around risk and management, risk analytics, covering the 16 countries in Asia. So I was vice president there. And so in 2022, I moved to entrepreneurial journey. So we're leveraging these knowledge around both finance and analytics. Idea was how I can help other businesses outside these MNCs. So I could be in BFSI and non-BFSI as well, leverage these new age technologies, AI, Gen AI, ML, data analytics. So that was the idea, and that is where for last 3 years I've been focusing on. In this journey, I've been now, I will say, fortunate enough to work with some other businesses outside banking and finance. So I worked pharma, retail, logistics, automotive, renewables. So these are the some other sectors where I have been able to help business leaders in solving their challenges around business growth, profitability, operational efficiency, primarily leveraging the data which they are generating through their digital transformations. So that's brief about me, and more than happy to
This was a superb introduction, actually. You kind of covered the entire gamut of things. So I will come to the first topic that, would like to take your insights on is that since you have worked with various organizations, even in this entrepreneurial journey and, beforehand as well, what are the common data related challenges which an organization faces while they are implementing a new solution, say an AI solution or a Gen AI solutions? And what are those challenges like? And how have you seen the enterprise approach those challenges? What are the mistakes that they commit, and all those things regarding that?
A very important question, Rishikesh, which you ask actually, because in current era of all these buzzwords of Gen AI, every organization is trying to probably adopt some kind of solution, some kind of use cases around it. But if someone has to think in a enterprise setup, and it could be not necessarily to only large organizations, even mid-sized organization. If someone has to think about the entire journey of the getting a value from the data. So the journey will start from the data sources, from where the data is coming. And with all the digital transformation which has happened in last 10, 15, 20 years in any organization, they've got a number of different applications, systems which are now generating the data, and they are not necessarily coming from one single vendor or one single solution provider. So there are data silos. So that is the first challenge which most of the organizations face, that I have data sitting in it's a distributed data architecture where data is sitting in multiple systems, on-premise, cloud, multi-cloud, data sitting in files, and then data coming from third party through APIs, public data. All these are the different kind of data sources and silos which generally exist. Not only that, the large organization might have different business units. They can be operating in different geographies, multi-country, multi-continent. So then the data is also physically distributed into those business units and the geographies. That is the first challenge that any organization has to probably create a map around, okay, what all, when we talk about data as an asset, what all asset we have in our organization. And then not only identifying the asset, even identifying the owners of those assets, who are the proper stewards of those assets. That is also very much required. So once you move from there, then the second part naturally comes is, okay, you have to integrate, because now you have all these silos sitting in all these different physical storage, different formats and all. So then how do you integrate? And that is a very complex problem to solve from an architectural perspective, because two things which are happening in current era is that one, lot of digital activities are happening where the new applications are coming or the existing applications are being upgraded. Whatever asset you identified at the first place is not very much, it is dynamic, it's not static, it's continuously getting improved as that over the months and the quarters and the years. So you need to keep your architectural mindset with that thought that whatever you're trying to integrate is dynamic, not static in the nature. Then second part comes the volume, because now if you know that the volume of the data which is being generated in any organization has increased multifold. Earlier, it was probably limited to financial transactions around sales, payments, and all. But slowly, if you talk about all customer interactions are being tracked, all digital activities are being tracked, all logistic activities are being tracked, even if there is a manufacturing setup. So all the machines are now becoming IoT, or they are generating the data even if they are not connected to internet, but they are definitely generating the data in the local environment about multiple technical parameters, business parameters, and all. So all that large gamut of data which is coming in all these directions has to be integrated in a manner that it can be it can the volume has increased. So we need to be ensure that the architecture is in a way that it can manage that volume, and that volume is again increasing exponentially with the time. So the architecture has to be, once you are done these two parts, then comes the real value generation aspect, and that is where you say, okay, now I also need to harmonize the data, because all the data which are sitting in these different application systems, and as I mentioned earlier, they're coming from different vendors. So the technical labels which are associated with the data, the kind of format which is there, are also differing. So now you have to bring the harmonization layer over on top of it. So just to give an example, think about in a bank or think about an FMCG company. They can have systems like CRM, transaction systems, and other systems where they're capturing something like customer. Now, application 1 versus 2 versus 3 might have three different kind of labels being given to same kind of data. So now you have to put that layer of the harmonization where you can bring not only the same labels, even the business context as well, because a lot of time the systems are developed by the technical people. Now your business people will use it, so you need to bring that business language also in the picture, so that it is not now the data is not only limited for the use of technical people, even the business people or other functional people are also able to use it. Once all this is done, then we now focus on, okay, what is the use case for which we are doing all this activity. And with everyone running behind AI, ML, Gen AI and all to get some kind of benefit into their function, there are a number of use cases. So then comes the prioritization, impact. Generally, you can have those kind of matrices, frameworks available to identify which use cases to start with. And then one thing which I was listening to one Gartner conference for 2025 prioritization, where they mentioned traditionally almost 49% of digital transformation has failed, and one thing which they very prominently highlighted was the misalignment between the CTO, CIO function versus other CXOs. So a CTO, CIOs will take the solution in the organization, and once it is completed, then the end user, which is the functional people, they will start using it. But that is what they're trying to highlight in a challenge. So they have come with a term called Vanguard CXOs, where the functional CXOs are now working with the CTOs and CIOs from the starting of the project, or they are actually co-leading the project of the digital transformations. So they are now a part of the development. They are actually bringing the business knowledge upfront in the project rather than at the end of the project, so that the use cases are more and more relevant in terms of the impact and the deliverable. So these are some of the challenges which I highlighted. The data silos, integration, harmonization. One point which I missed out is the data quality, because the way the data is being captured, a lot of data also being captured manually. So that manual data being captured, and sometimes even within the machines also, the data can have multiple kind of data quality aspects. So all being said done, you can build any AI ML model, but the output is actually linked to the input. So garbage in, garbage out, as we know, is the outcome. So if your data is only 30% good, then outcome is also 30% good. So organizations are also putting a lot of time now to improve the data quality. So integration, harmonization, quality, and then being a partnership with the functional team from the starting of the journey is some of the challenges which organizations are now looking at. Probably I've taken longer to answer this question.
But this was very elaborate. This I think is very insightful. Is better than a lot of people who spoke before. I think because this gives a very good view of what happens within the organization. Why do digital transformations fail? What are the challenges? And Pawan must say that you have an enormous clarity. I seriously believe that organizations who must be working with you, will get such a great knowledge base from you and will be benefited. So in this
Thanks,
entire
Rishikesh,
thing,
for your kind
you know,
words.
it's like you deserve it, Pavan. I was going through your profile and I was like kind of amazed that you started from somewhere, you went to, banking finance. Now coming to banking finance, like since you have worked inside risk domain a lot and you have done risk analytics, risk as such is a very important department in any bank. Tell us about a few new tools or technologies which are coming in this particular domain, which you might have used or would like to use or would see it to be building sometime in the future, which can help a lot in kind of streamlining this particular function inside the banks or improve
Sure,
productivity or
Rishikesh.
something.
And you rightly mentioned, definitely. So, Rishikesh, you rightly mentioned risk is a core function. And just to put a perspective about the importance of risk management in any kind of banking institution, if you look any big failure of the bank in the past, whether it is being Lehman Brothers or even Credit Suisse going bankrupt, or even Silicon Valley Bank for that matter, all these large banks primarily failed because of the poor risk controls or poor risk management. Generally, in banking, we call that you are not in a business of managing the money, you are actually in the business of managing the risk. If you can manage the risk very well, then you can survive for long and you can generate value for your shareholders. So now within the risk also have multiple aspects, if I can tell. One aspect of the risk which most of the organizations focus a lot is a credit risk, and that is where my most of the journey has been, which means identifying your counterparty, which means the customers. If they go bankrupt and if you're giving them the money, then you lose that money. And that, if we use the term called NPA, non-performing asset, that is actually reflecting that how much money a bank will lose after whatever they've given. So the role of the risk management team is to reduce that NPAs for any organization. And it is true both in the retail business as well as in the corporate business. Corporate business, I will say the volume of the the amount, or the I will say the spectrum is much larger, because the generally any corporate engagement will be a large amount of money being involved over there. So it becomes more and more important over there. Now, few things which are happening in recent era from a risk management perspective is that earlier, risk management was more reactive, which means that you look into the data, you do more historical simulations where you identify the pattern over the year in terms of transactions, behaviors, as well as market movements. But slowly now it is trying to become more and more proactive. And when I say proactiveness, which means, so we call it early warning systems. And now early warning systems are generally a very good area where a lot of focus is there in most of the financial organizations today, whether from a retail perspective or the corporate perspective. Just to give an idea, in India now we talk about loan being given in 2 minute or 5 minute or pre-approved loans. Now, when someone is applying for a loan through a digital journey, they are providing some credentials, they are providing their information about Aadhaar card, PAN card, or other social security details. Leveraging that information and the model, the risk model in the back has to work through all the data sources available, pull out the information, run the model, and then take two decisions. One, whether to give the loan or money or not, and second, how much. And all this has to be done very, very proactively, because within 2 minutes you are giving the decision, right? So that is one aspect where risk management is evolving a lot, where it's not that you simply make a simple strategy or okay, people above this score and people working in these organizations will get the loan. Now, with the financial inclusion going more towards the bottom of the pyramid, where a lot of self-employed or people who are working in non-regular jobs are also being given the money, or they are being provided financial support. The models are becoming more and more adaptive in that way. So this is one aspect. Second aspect is, once you're given the money, then you also need to ensure that you're continuously monitoring your portfolio. And again, this could be for both retail and corporate. If I talk about corporate, now models are evolving to the point where they are continuously scraping the information through internet about any kind of news which is coming about the clients which are part of your portfolio, as well as the other kind of information which is coming, which could be as simple as that geopolitical risk, macroeconomical risk, or some local events which are happening, which can have some downside risk on your portfolio. And that is the proactiveness which I'm talking about, that you look into these news articles, scrap through it, and try to identify the factors, levers, which can deteriorate your portfolio quality, and identify which specific sectors or which specific client will get impacted negatively through this. And then activate your internal network, which means your relationship manager, front office teams, to start engaging with those potential client where you see the risk, to either increase your risk mitigation or reduce your risk on those clients by probably limiting the limits. So that is the kind of proactiveness which is going into it. So it's not that a company will declare the bankruptcy and then the bank will go and look after, okay, how I can recover the money. It is identifying what is the probability of default of this, of the companies in my portfolio at a time basis, like in next 1 month, which companies I have, what is the percentage of default possibility in next 1 quarter, in next 3 quarter, in next 1 year, what is the probability of default. So these are the kind of models which are being built. So as I mentioned earlier, it was more historical simulation. Now it is becoming more, so that we call it Monte Carlo simulations and more complex models, which now are more future looking. So they will build the model to identify, okay, in next month what is possible, in next quarter what is possible, and that gives it the signal to the teams inside to take the next level of action. So these are some of the development which is happening. And one specific area where I have not worked very actively but I have been associated in most of the bank is the operational risk. And operational risk, if I can put it in a very layman language, is unknown. So we really don't know what will come. So try to work in the direction to identify that what could be possible thing which is could happen. So try to keep on enhancing your, I will say, eyes and ears to keep on finding those clues to at least make those unknown known to you, and then identify what could be the impact. So that is another area where a lot of financial institutions continuously work. But I will not delve into it because I have been not actively worked on that area.
Yes, I was talking to another professional, VS Ravi. He was talking about something called Foresight. So I think Foresight relates to that. I think, kind of getting into the future,
Right,
identifying
exactly.
and then backtracking things.
Right.
Great. And just on a lighter note, Pavan, I saw that you are a graduate from NIT Jaipur. So which hostel you were in? Arvindo Hostel, or you
So
remember
those
the
time,
name?
those hostels didn't have a name, and we every year used to change the hostel. So I
Yes.
started from hostel number 2 in the first year, then I moved to hostel number 3 in the second year, then hostel number
Yes.
6 in the third year, and hostel number 5 in the final year. I was recently there in April only, so I took a chance to visit the college and hostels along with two of my batchmates.
Absolutely. So my younger brother is also a graduate from NIT Jaipur. So I used to kind of go there every month, just to cross check on him because I was in Delhi. So I've kind of lived in all the hostels here.
Good to know. Good to know. Good to know about your younger brother. Has he completed or is still studying there?
No, yes, he completed in 2017, 2013 to
Wow.
17. Now he's with Walmart in the US. So he takes care of data
Excellent.
analytics there.
Excellent. Excellent. Good to know
And
about
IT
your brother.
Jaipur has a very strong alum, network. People, love to come there. I've seen that.
Yes, it is a 60-year-old organization in India.
But that is one thing unique actually, Pawan. If you see the graduation colleges now, उससे कभी connection छूटता नहीं आदमी का. MBA में जो connections बनते हैं वो बहुत transactional होते हैं. But the connections that you build in graduation colleges, they are more long term.
There are some, I will say, human nature related things. So first thing is your first time out of your, I will say, home, right? You are staying in hostel for the first time. So you're being exposed to your, I will say, outside world independently for the first time. Whatever you are doing is actually purely yourself, which is coming out. So to your point, it's not transactional. You're trying to build the relationship, you're trying to build the bond, and you are also learning in the journey that, okay, whom to trust, whom not to trust, what is my characteristic, what are others' characteristic, and where is that overlap where probably, and all this happen naturally. You're not doing it consciously, it is all happening unconsciously.
Yes.
So, and that is where the relationship in graduates are much, much stronger rather than when you go over the post graduation, you are a little bit more matured, right? You have done like your 3, 4 years of graduation journey, or you might have worked in industry for few years. So you have seen a lot of things, you have got a lot of preconceived notions in your mind. So when you're interacting with someone in the world now, you have, I will say, a lot of filters in between. So
Yes.
you are not naturally interacting with them. So to exactly to your point, the relationship in the post graduations a lot of time become more transactional because we are already putting a lot of filters. While in graduation, it's all being developed naturally.
That is true. Now, Pawan, I will go back to, there are a lot of startups and innovative companies in India which are building in the banking space, BFSI, and one or two things always come up, while they are building and they're looking to approach the first set of customers is that banks are tough to crack. There is a lot of compliances over there. Regulations are there and banks have to follow that because that's a part of their process. What will be your advice to the startups which are building in the BFSI space for various domains? How can they get the first set of customers for their product? What should be their approach like?
So generally, there are two kind of startups, largely not limited to the banking setup for any kind of a startup, and this is being talked a lot in the network in the startup ecosystem. That one is where people have almost no experience or limited experience of being working in any sector or any domain, and then building some solution out of it, out of their limited knowledge, understanding. And second is people who have more than 10 years of experience and they are seeing the challenges firsthand and then trying to solve that as part of that startup ecosystem. So generally the second one feel that challenge not very challenging. I will not say they will not fail the challenge, they will see the challenge, but for them working with their prospect clients is much easier compared to the first lot because the people who have worked in the industry are already aware about the challenges. They can lot of time this is their personal experience and they already have network with their ex-colleagues who are working in those, and they know to whom this problem is actually paining a lot, so they directly reach out to those people or those particular personas, if I can say. While on the first front, first set of the startup, one thing I generally guide or advise to most of the companies is sell before you build. So don't build a solution and then go and find a customer. First, reach out to. So anyway, you will have to make a list of customer or prospect to whom you will sell. So first work on that thing, that reach out to those people, try to understand their pain areas, and generally there are three questions which needs to be answered. The first question is this really a problem statement or not? Or when I say the problem statement, it is actually a wider problem statement. A lot of people are feeling that pain or not. Second thing, are they really looking for the solution? Sometimes they have the problem, but they are not looking to solve the problem. So that mindset has to be there, they're looking for the solution. And third thing is, are they ready to pay and how much they are ready to pay? If they are ready to pay and the amount of their money they are ready to pay, if that commercial works for you to build the product, then only build that product. So there could be hundreds of problems available in your interaction with these prospects, but don't work on all the problems. If these three questions are being answered in your discussions, only focus on those problems because these are the real value generators. And now if you're building the solution, try to do some co-development rather than doing building a solution yourself. So from the starting, take out of those people who have mentioned about those problems, take one or two of them as a co-developer with you, because a lot of time for building these solution, you need to be part of the customer journey, part of the, or you need to have require underlying data, and the outcome which you are generating has to be cross-verified by the real business scenarios. So if you do that code development, your chances of success are much higher. And because you are doing a code development, at least those one or two organizations and leaders will become your natural customer. And that actually opens your door for the larger customer base in the industry. So that is how I will I generally guide and advise to the people that don't build and sell. In some very limited scenarios, it is possible, like Steve Jobs building an Apple. If you'll go and ask for people about iPhone or Mac, probably people will not ask for it, right? So that is a different scenario. But in large scenarios, if you are trying to solve a problem, then at least get that clarity about those three questions and work with those people who are actually giving yes to or giving positive note to all these three questions.
That's a superb advice. So you talked about co-innovation, that we are seeing that a lot of health tech startups are also getting into co-innovation where they are partnering with say Apollos and Vedantas of India and developing a solution rather than, creating a solution and then selling it.
Not necessarily
So
health tech, within the banking also. So for example, I know Standard Chartered has a particular arm where they do a lot of work with the
yes.
startup ecosystem. ICICI Bank locally here in India, they have an entire startup ecosystem. I know a person, named Mr. Ritesh Sasdeva is there. So he's leading all these initiatives over there. So it is happening very much in the banking sector as well. If you look at a NPCI is actually a co-development because all the banks were part of it while the technology was being developed. So it was not the technology was developed and then they reached out to the bank. I understand it was part of the, it was under the umbrella of government, but still it was co-developed. And now we know the success of NPCI because of that co-development.
Pavan, now I will get to to your experience. Say, you were a part of Credit Suisse, you were part of JP Morgan, and you were also a part of a lot of other companies before that as well. You must have to take a lot of buying decisions, in this entire, journey, like maybe evaluating a product or discovering a product which may solve a particular requirement. How does your discovery journey looks like? Like suppose you have defined a requirement, you know that this is a problem that you're facing. You wanted to implement some technology there. How do you go about to discover a solution, which may fit to your scheme?
So it's not it's a challenging journey, if I can tell, right? Because if you have a problem at your end which you are trying to solve through some partner ecosystem, really finding out that right solution is not easy because there are a number of potential solutions. How can you have visibility on all the potential solutions available there? So obviously, some of the traditional approach is going through some consultative arms who can probably work very specifically in that, and they might have a specific experience working in some of the solutions, so they can probably provide you some insight into that. And then second is the digital platforms, the traditional digital platforms where some of the existing customers are sharing their feedback. Third one is when we generally meet with the industry peers in some conferences and all, then we share the thought and all. But all that being said done, it is only the introduction and the visibility aspect. After that, lot of decision making happens through a, I will say, complete process. So in B2B, seeing a solution is not a one-man decision. It is generally a group of people who are involved into the decision. One is the economic buyer who's actually sponsoring. Then there is a technical buyer who's actually ensuring that the technology well integrated with the solution. Then there is a business buyer, and then there is actual end user who will use it. So there are multiple people who are involved into it. So when you are looking for the solution, you also need to keep these people into the journey. So even from a solution perspective, a solution provider perspective, I generally say that don't interact with one single person. Think about all the people who are part of the decision making. If you are not aware, if you are doing the interaction, I asking, okay, who all are part of your decision making? What is your entire decision making process? So there is a very good MEDICC, I'm not sure if you're aware. So in B2B sales terminology, MEDICC is a methodology which is generally used, MEDICC. So it actually provide all these points that in decision making process, who all are involved, identifying them early, interacting them. Now, from an internal perspective, when I'm looking at a solution, I need to first understand whether it is at core solving the problem or not. But that itself is not sufficient, because if I talk about a bank or any financial institution, they are generally large organizations and they are running for many years. So they have a lot of set processes. So when they are looking for a solution, there are consideration like longevity of the organization. So if you are as a startup coming with some solution, but you are like a 2 year old, me as a buyer always have that concern that what if you close the shop in a year? If I take a bet on you to give a chance and solve this problem for me, we take few months to integrate, deploy, and then start the consumer journey. And because of whatever reason you close the shop in a year, then my entire money and the time and the effort is completely wasted. So even those kind of concerns are taken are on the back of the buyer, and that is where giving a chance to a startup is not very easy. That is where I'm saying the co-development part becomes a good way of making the decision, because when you're doing a co-development with a partner outside your organization, you are also getting to know about the team, their structure, their strength, their probably the future plans and all. So by the time you develop, you are actually solving a lot of these or getting answer to a lot of those softer questions which are not related to the core problem, that whether you actually want to go ahead with them or not. As I mentioned, it's a complex puzzle to solve. It's not an easier puzzle to solve, but it starts from the visibility, that how can I as in a buyer get a visibility around multiple sources, which I mentioned already, that these are the different platforms where I can do it. Then second comes about evaluating those visible solutions through my process of core problem solving, longevity, economics, and then obviously the support system available in case I onboard. So these are the multiple channels which, sorry, multiple steps in the process of the buying.
This is great. And many a times, Pavan, so companies are not clear about their requirements also. Like, I have heard a lot about sales deals not closing faster because the problem is more on the buyer side. They're not clear about their requirements. They are doing window shopping to understand, how to build their requirements. And that is okay. That is completely fine because nobody is aware of what is best happening so do you think that, something which kind of gives them a visibility of a similar implementation which has happened in a parallel company or a parallel kind of a setup will be helpful to them, at least for understanding what has worked out well, how to define their requirements well, and all that, if that is given in a very unbiased way that something similar has happened in a particular company, something like that.
It helps. So, if I talk about a technology space, there are two things. One is the underlying capability, and second thing is the outcome. So, the underlying capability is something which I can have a visibility by looking into some alternate, some pre-deployment or existing customers. But end outcome might differ from pre-customer. And a lot of I tell that if you are building something for a bank like ICICI versus an HDFC, they might have a complete different requirement, but the same technology might be able to deliver both the outcomes. So, and you rightly mentioned a lot of time buyers don't have visibility around what they need. They sometimes are talking about symptoms rather than the real cause. And this is very crucial for the solution provider to sit with them, do those exploratory calls initially before even getting into the demo. That I did do this root cause analysis, making those fishbone diagrams where you say, okay, these are the symptoms which we are trying to solve. But if I go more deeper, and there are frameworks like 5 whys and all, where you keep on asking the questions to go deep and try to identify where the real problem is, which need to be solved to correct the symptom. And then you see whether that real underlying cause is something which your technology can solve or not. If your technology is actually hitting and solving those underlying causes, then your technology stack will work for that particular buyer. And buyer also appreciate it because you are taking that pain and time to make them articulate their own problem. So they were not able to do it till now for whatever reason, but you are helping to bring that structured thought process where now they are in a position to better articulate it, both internally to their organization as well as to the outsider, a solution provider. Because internally also they have to go and buy for the budget, right? So they can't simply go and buy the budget. They have to actually very well make those proposals about the underlying problem, ROIs, time frames, and all those things. So if you're doing that effort where you are helping them to structure all these things, they also appreciate this part. So as I mentioned in previous question about co-development, it's not directly working on some solution. Actually, it starts from the problem identification and the underlying root causes. So that is what I will generally suggest, and based on my experience, that help the buyer. And sometime probably after those exploratory call, you say, sorry, my technology stack doesn't work here. You are trying to solve something as a symptom level, which we thought we might solve, but we have gone to this point, and now we probably and it is always good to say no. Need not to necessarily try to bring your solution to a buyer, and after 6 months you identify that it is not, the symptom is still there because you are not working in the right direction. So that is what my advice will be. But yeah, if you show some existing solution deployments, it helps the person to see that how it helps the person to visualize how my end outcome will look like to some extent, right? So for example, if you talk about customer onboarding journey, so if you've done something for a digital journey of the customer onboarding to some particular existing client, I can think through, okay, this is how it will look like, but I might have my own specific nuances, some specific aspect of integration which I want to do differently. I might have a different system compared to other player in the industry. So my systems might behave differently compared to the systems available with the peer. So those things has to be taken care when identifying whether this solution will work for me or not. Absolutely. And that point, helping the buyers to articulate their problem is very, very critical.